Hey guys, welcome back to another episode of The Trading Edge, your weekly look around the markets. If you guys are brand new, my name is Akil Stokes. I'm a professional trader. I am also a co-founder and a trading coach over at tier1trading.com. If you guys are brand new to the channel, this is a weekly video that I provide giving you my outlook on the markets and showing you some of the best opportunities that are on my radar for the week to come, along with what's hopefully some lessons on technical analysis, trading psychology, trading as a business, and really anything else trading related. Now, if you're new to the channel, do me a favor, hit that subscribe button. That way you don't miss my next upload. I've got live streams, I've got shorts, I've got podcasts, I've got these videos. I got a lot of stuff happening here on the YouTube channel. And if you are someone that has supported the channel for years and years and years, thank you. I appreciate you guys doing what you do. Do me one more favor, hit that like button to show that you love the video. Now, I got a lot to look at this week, but before we get into it, let's take a look at what is on the radar as far as the economic calendar goes. And we touched on this last week, and you can see the markets preparing for this already, but this is a massive week in the markets. We have a lot of interest rate decisions happening. You can see in front of you, we've got the FOMC on the 14th. We've got the ECB on the 15th. We also have the Bank of England on the 15th as well. So a lot of high impact, one would say the highest of impact news events coming out one after another this week. So my expectation on the market is that we're not going to really see a lot of movement. Usually no one wants to kind of do anything dumb or make any type of move until the news comes out. So don't be surprised if you see a really slow consolidative week before maybe a potential move, depending what any of these central banks do. But if you've been following this channel, you know that slow and kind of choppy movement isn't a bad thing, especially if you're a head and shoulders trader, or not head and shoulders trader, sorry, especially if you're a pattern trader. I say head and shoulders trading because, well, head and shoulders also come in the form of consolidation, but after directional moves. And, well, we saw a lot of in the market last week, and they were very, very good to us, so it's been on the mind. Speaking of patterns, a good pattern formation that we spoke about last week, I'm not sure if it was in the video or the live room, but we looked at the euro dollar here. And we had two pattern formations forming. We had a simple pattern formation and we had an advanced pattern formation. At the time, right, if you can imagine going back to the beginning of the week before we got to here, we had a rising channel, which is a sign of loss of momentum. We then went down to the 60-minute time frame to 4 hours as well. And we had a very nice advanced pattern formation in there as well in the form of a cipher. And we had a nice little conversation on combining the two, how you can take the higher time frame analysis with your overall directional bias, and then you can use the lower time frame reason for entry, the cipher pattern in this instance, and you can put them together and kind of combine them into a few different, or I guess a better trading opportunity. Well, as you can see, the cipher played out nicely. We did hit target ones, didn't quite get the targets two yet, but you should still be in here if you're holding on for secondary targets. But we have the same opportunity forming on, well, not the cipher pattern, but the same loss of momentum pattern forming here on the daily. It's just shifted a little bit. Instead of a rising channel where we see essentially kind of equal moves up and equal moves down, we see the range getting smaller and smaller. And this is what's called a rising wedge. Now, same exact thing you would expect relief, right? So momentum is slowing down. You would expect some type of movement in a normal scenario. Again, this scenario is a little bit different because of the interest rate decisions coming up. So it's more of the market just kind of hesitating. But in general, when you see this pattern in the market, it's a sign of loss of momentum. Now, something I've always said is that the what is not as important as the where. And what I mean by that is that you can study a lot of patterns, you can study a lot of this, a lot of that. Most of it is going to be completely random. Most of it is not actually going to give you an edge in the market. Trust me. Early on in my career, I learned about this simple pattern called the double top and double bottom. It was a beautiful pattern. It was the holy grail to me, and I thought my trading, my trading journey would be turned around by knowing this pattern and simply trading it. And I rushed into it. I didn't properly test it, and I learned the very hard and expensive way that if I traded every single double top and double bottom, I would go broke. Now, fortunately, I stopped myself before going broke, but I did donate a lot of money to the market before learning that lesson. Now, you fast forward, 15 years later, I still trade double tops and double bottoms. So you might be saying to yourself, Akil, this pattern almost drove you to the poorhouse. Why are you still trading it? Well, there was nothing wrong with the pattern. There was something wrong with the user, right? The pattern is good. The user was just using it wrong. I wasn't using it in the right type of way. I was trying to trade every single one, where what I should have been doing is trading the ones that come at important points, in the market. And once I made that adjustment, boom, it opened up the whole new door for me. I apologize for the word slurring and whatnot. I'm recording this late at night. I've just spent, I don't know how many hours with my kids, watching World Cup games and kicking soccer balls around the house and taking them out. And I'm tired, but I'm trying to get to church tomorrow. So I want to get this video out tonight instead of tomorrow morning, which is what I usually do. Anyway, we have this loss of momentum pattern. And not only is this a very nice pattern, but it's also forming at a previous level of structure. So look left, structure leaves clues. So again, personally, you probably want to stay away from the euro dollar this week. But if you're watching this kind of after the fact, in general, this would be an extremely good setup, having that loss of momentum pattern line up with a previous level of structure. Next, we're going to look at the euro yen. We're going to make this one short and sweet. Just like the euro dollar, this is a pair that you probably want to stay away from until dust settles later in the week. But from just a technical perspective, we have a pretty nice pattern setting up, or rather I should say we're at a pretty nice level. If I draw a horizontal line and right here at about 143s, right? 143 has proven to be an important level in the past, right? If we just look left, you can see that the market has respected this zone on both sides, both as previous structure support and previous structure resistance. So if price action can get to this level again, right, this is going to be a very nice decision point where either A, we can expect some type of hold and a move back up across the range, or a move to the downside. Now, a move to the downside is the one that I'm anticipating just because I think there's a little bit more opportunity there. It's going to be tough to kind of pick target to the upside because we've been bouncing up so many times in the past. But if we can violate this 143 even handle, my expectation is that we're going to come right back down to our VS1 level. That's that green box that represents a level of structure support. And that's a pretty nice move from 143s to 142. So maybe we'll get some help later this week with the fundamental news that comes out, but certainly keep an eye on euro yen. Violation of 143s should take us down to 142s in my opinion. Up next is the pound yen. I feel like we've talked about this before, but I do these things every day, so I can't remember if it was a live stream, a weekend trading edge, or just inside the tier 1 platform. But what we have here is consolidation. But in consolidation, as I mentioned before, we can expect pattern formations. We have two potential pattern formations forming here on the daily. And again, wanted to pick the daily out because it's a bigger time frame, just so in case we do get any mess this week. But one is going to be a potential cipher pattern, right? If I just take my pattern recognition tool here and draw it out manually, because that's the way I like to do it, we have an X to A, our swing high to swing low being our first leg. This first retracement is going to be our B leg. You can see in the top it says at this point it would be a bat or a cipher. We know that once we get that extension to the downside, the bat is invalidated, and now we only have a cipher on the radar. And if price action were to push up to this level right here, 170.18, that would be the decompletion for our cipher pattern. Now, not only that, but we have a second pattern as well, and this is going to be a butterfly pattern, right? Butterflies, if you guys are new, I talk about them a lot. I don't personally trade them, but they are my favorite pattern, just understanding from a price psychology perspective. But that butterfly would look like this. The B leg of our cipher is going to be our X. The C leg of our cipher is going to be our A. This retracement, this deep retracement right here, is going to be our B leg. Our next retracement to the downside, you can look at this as our failed extension, is going to be our C leg. And if price travels up to this level right here, that is going to be our decompletion. So if we just take a look at the zone here, this is the cipher completion zone from our decompletion to our structure high right here. And the butterfly pattern completes right in that. We have two patterns in the same kill zone. You already see we have a VS1 level there, which means it's a previous level of important or major structure resistance. Good area to start looking for opportunities, whether it's aggressive with an entry for the advanced pattern formation, or if maybe you're just a CTS trader, combined technical score, you looking for different clues and building your score to get a short entry if price action gets to this level. Aussie Canada is next. We got our breakout out of the VS1 level, as you can see, and we are reaching higher. If I just take my horizontal line tool and draw a line at our previous level of structure right here, both outside structure and inside structure, you can see that we actually ended the week with a higher high, higher close. Now, what we preach here at Tier 1 Trading is rules-based trading, right? We don't want to just get in the market and do random things for random reasons. We want to have a rules-based way for approaching the market. Now, there is still some subjectivity, right, in discretionary trading. That's going to be part of it. But if you can make your trading and trading plan as rules-based as possible, you're going to eliminate a lot of the randomness. You're going to eliminate a lot of the psychological mistakes, the mental mistakes. You're going to put yourself in a much better position as a trader where you have the best opportunity. Well, first of all, you have an edge over the market, which is your statistical advantage. And now you have the best opportunity to extract that edge as long as you can properly follow that plan. So rules as far as reading a price chart and identifying levels of structure are simple, right? If we violate a previous level of structure, in this case to the upside, so meaning a higher high and a higher close, then I predict that price action is likely to go higher. If we did not violate it, meaning that we held, then I cannot predict that price action is likely to go higher until that violation happens. So just having that simple rule in place gives me that directional bias where I can look at this chart and I can say, hey, I'm not interested in shorts at this level. I'm only interested in longs. The next question then becomes, if we're interested in longs, where are those longs likely to go to? Well, you can see we have our major level of structure up here, our VS1 level around 94s. I think that's a good target level, but I think that's a long shot. So that's more of a secondary target level. Between me and you, I would look for two different target levels depending on how conservative you are. One would be right here at about 93.37s. If you're a little bit more conservative, 93 evens. Now, I know 93 evens looks close, but as we go down to the lower time frames, you can see there may be an opportunity to get a lot more of that move. But real quick, while I'm here on the chart, because my mind is racing, I want to see if we have any confluence here as well. Let's take a Fibonacci extension and invert it from our swing low to our swing high. So a Fibonacci inversion right here. See if we have any confluence there. Oh, look at that. 127 at the level we just broke. Again, that major level or that previous level of structure. 1618 right at the top here. Just want to bring my volume profile real quick to see if we have anything. My bet is we're going to see it right in this level, that 93.50s level. But let me see if there's any relevant levels of high volume spikes. Yeah, pretty even. Yeah, a little bit of a bigger spike right here about the 93.50 levels we spoke about, but nothing that really stands out. And you're really kind of equal volume all the way from where we're currently at all the way higher. So that doesn't really give us a lot of information. So again, a few levels to pay attention to. I think 93 even is going to be a very conservative level. 93, right below 93.50s is a moderate level. I think 94 is certainly doable, but I would certainly take some part of your position out before that. And by the way, I did get a lot of questions recently about target taking and what's better, target ones or target twos. And I put out a podcast last week. I think it's a Trading Coach Podcast, episode 737, called Profit Taking Strategies, where we talk about what's better, or I think it's called What's Better, taking multiple or single target, something, I don't know. Episode 737, but we talk about some of the things to think about when deciding between taking different targets. And it's funny because I'm actually doing some back testing right now on a Bollinger Band strategy. And I just did a little bit of my baseline test and I'm playing around with ideas on that. And, I went from I tested different target levels, right, to see which one was ideal. And the conservative one wasn't working. The middle one wasn't really any point of doing that. The aggressive target, which gave me the best risk reward, was the greatest performing target from a profit perspective. So initially I said, okay, well, that one gives me the most profit. Let me go with that one. And then I did some more back testing on it and saw, right, the win percentage was horrible, right? Much lower than kind of what my threshold is. But as I went back, because I knew target 1 didn't work by itself, target 2 didn't really work by itself, target 3 didn't work by itself, I actually put together a strategy of trading it where, I took off a certain percentage at target 1, moved stops to break even, and took off a certain percentage at target 3, kind of getting the best of both worlds, and it started to change things around. So it just goes to show you, man, you got to play around with these targets. You can't just assume this is the only way that's going to work, or if you have a system, you can't just ditch it because it doesn't work the first way you try it out. You got to be how you got to be creative in the market with how you attack it. You got to be creative with your position sizing and your risk management strategies as well if you really want to maximize what you're doing. But let's get back to the charts, because again, I'm really tired and I'm limping to the finish line here. But if we go down to a lower time frame, right, you're going to see a little bit of relief start to happen, right? You can see we start to have smaller candles at the end, right? If we get a retracement to start the week, and where would that retracement come to? Look at this beautiful long-legged candle right here, this beautiful wick right here. Again, this means selling rejection, meaning that the sellers tried to push it down and boom, they got rejected. If we can get some sort of relief and come back down to this level, great level to look for a pullback trade. And what I mean by a pullback trade is you wait for price action to pull back. You look for your entry reason, whatever it may be, 3-bar reversal, double bottom, that's going to be up to you. And then you look for a move higher. And we spoke about 93 being a conservative target and being kind of close. Well, yeah, it's kind of close when you're trading it at market from 92.70s to 93, only about 30 pips. But all of a sudden, when you get that retracement, we're coming back down to 92.40s. Now you're looking at 80, 90 pips of potential profit. And just by eyeballing this right now, it looks as if we were to pull back here, it looks as if that would line up with a 127 extension. Yo, 2 for 2 today. Look at that. So some nice Fibonacci confluence there as well. So a few things to look at on the Aussie Canada. Usually a consolidative pair, so very rarely do we get some type of directional trade here. All right, next up is the Canada. Again, this is going to be a pretty cool one. I spoke about this past week. We saw a lot of head and shoulders patterns form in the market. We have one forming here as well, but we also have something else. We're kind of a daily double, right? 2 potential pattern formations here, one simple and one classic, one advanced. Once again, if we take our swing high to swing low, our first retracement, our second retracement, and we drag it all the way up, we have a potential bearish cipher completion setting up right here. We're also forming the potential, I'm gonna go ahead and erase this thing just to clear up the space. We also are forming a potential right shoulder here, right? You can see price action, that X to A leg ends up being a left shoulder. That extension down to the C leg ends up being a head. Our move back up here, retest the neckline. This retracement right here is going to be a right shoulder, and we're almost at a symmetrical right shoulder level. Now, head and shoulders patterns are some of my favorite patterns to trade in the market. I consider myself a student of kind of classical chart patterns, and this is one that is I guess one of the mainstays up there as far as classic chart patterns go, but it's also a very easy one to understand from a psychological perspective. And I personally like pattern formations that I understand because it gives me more belief, more trust in them, obviously, to go along with my data, which leads to less psychological mistakes. And I spent a lot of time researching head and shoulders, and I had a lot of questions that I wanted to answer, a lot of things that I wanted to dig into. And this is where kind of the education side comes to hurt me. I just didn't have the time, right? I had 2 choices. I can either start working on the training course so I can teach you guys how to trade this in the most efficient and effective way possible, or I can dig in and really find some nuances that allows you to trade it even better. And I just chose to do the course instead of that. But there's been a trader that I've worked with for, I don't know how many years now, Rain. It's got to be 4 years, who trades head and shoulders patterns, and trading and head and shoulders patterns are one of his mainstays in the market, meaning they're a heavy part of his trading plan. And something I mentioned it in our course, but I didn't have time to dig into it numbers wise. Something that I looked for was divergence throughout the entire pattern, right? So there's 3 main points. Again, we have our left shoulder, we have our head, we have our right shoulder. And if we look at the RSI, right, you're going to see we have 3 main points as well, right? We have our left shoulder, we have our head, we have our right shoulder. Now, in the stock market, and I guess you can do this with forex as well, but I'm iffy on volume in forex on certain time frames. We won't get into that. But in the stock market, something you're looking for with the head and shoulders pattern is a loss of momentum throughout the pattern. And then obviously momentum being gained as we get the breakout and new, in this case, buyers entering the market. Something to check out here on head and shoulders pattern is divergence between the 3 points. So you can see that we have these 3 points right here, and we have a steady flow of higher lows right here. And what Rain mentioned, he says, when he sees this in the market, meaning a head and shoulders pattern at or with this type of divergence in there, what it does is it allows him to enter aggressively at the right shoulder. So typically in the head and shoulders pattern, we're entering at the break of the neckline and we're aiming for whatever our target point may be. He's able to enter at the right shoulder, either take a partial off at a retest of the neckline, which is a very safe place to put a partial at, and or shoot for his full target or the other part of his target at whatever the normal prediction is. So this simple little kind of, I don't want to say it's simple because you got to do a lot of research, you got to do a lot of study, a lot of number crunching, but now you kind of know what to look for. Now it's up to you to just do the work. But this simple little kind of filter, I guess, that allows him to be aggressive at the right shoulder can potentially, really double the amount of profit that he gets on each trade simply because he's getting a better entry. So I thought it was really cool. I want to share it with you guys. For you guys that are getting into some winter homework, maybe this is something you dig into. And again, you kind of know what to look for now. Now it should be easy, right? Just go and do the work. Keyword should be easy because most of you aren't willing to do the work. Now, speaking of work, if you're having trouble working through your trading journey, maybe you've hit an obstacle that you can't overcome, or maybe you're brand new and just have no idea what to do, I recommend checking out our website, www.tier1trading.com. Get on the platform, hop in some live rooms, take some courses, connect with the community. Let us show you what it takes to be a consistently profitable trader. We got a new year right around the corner between me and you. There's probably not a lot of trading worth doing at this point in the year. So dedicate the next 3 weeks, dedicate the next 4 weeks to putting yourself in position to have a successful 2023. And what I mean by that is that doesn't mean trading live on January 1, but start thinking of your goals, right? 1, do you really want to be a successful trader? And 2, if you do, put together a timeline that actually makes sense and start right now. Start putting together a plan, start working on that plan, and put yourself in the best position to succeed. And in my opinion, that starts with having the right education. So check out our website, www.tier1trading.com. Of course, you can email me at akil@tier1trading.com if you have any questions about anything, or just leave comments below this video and I will answer them. Hope you guys have a great weekend. England, I'm sorry, but I'm not really sorry. There's always next year, or 4 years from now, I should say. Until then, plan your trade. Well, not until 4 years. I'll see you next week. But until next time, plan your trade your plan. Take care. Too soon?